Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, June 10th, 2009. Well, we are seeing a down day on Wall Street, but that's not at all how it started today. In fact, it started with a big up day on the back of Asia having a monster move on some commodity pricing and some other factors that made the market look like it was going to rip higher this morning. The futures were gapped up. The Dow was up, looking to open up 100 points or more. The S&P up about 10 points or more, and it just looked like a monster rally early pre-market this morning. The markets did open positive, but as soon as they opened, the market started to sell hard. And I had talked to my chat room, and I had talked to my subscribers and put out blog posts on this morning, expecting the fade. And I'll tell you why. Because everywhere I looked, there was negative things out there. We had mortgage filings for mortgages down to new lows, folks, and that's the scariest thing of all. And I want to just stress that again. All right, when the Federal Reserve came out and said they were going to try to prop up the housing market and everything like that, but because they're printing trillions and trillions of dollars, and you have bailouts and stimulus packages and this and that, and then buying bonds and the U.S. debt and so forth, you're basically having a situation where mortgage rates or rates in general are rising. So you have the 10-year spiking up huge. You have all these different rates where people are demanding more interest if they're going to take on any debt of the U.S. So basically what we're saying here, folks, is that the rise in rates is affecting the mortgage applications. And that's huge. I can't stress how big that is in this market, because as soon as the rates go up, less people can refinance, less people can take out mortgages on a new home because the rates are higher, meaning the cost of that mortgage per month is going to be increased. They're estimating as much as 10% more because of the rate rise of late. And that's really, as soon as I saw that and I heard that this morning, as soon as I saw the fact that you saw the dollar getting hit again, Russia actually came out and said they're going to sell U.S. treasuries and buy some IMF bonds. That's huge news. You're seeing a big move away from the dollar. Now, the dollar initially spiked lower and then recovered to move higher. And even though the dollar has moved higher on the day, you're seeing rates continue higher. And you can look at the TBT. The TBT generally will give you an idea of rates. And look at the move on the TBT today. Huge move up. Take a look at the daily chart on this TBT. This is what I've been talking about. You had rates going back to April. Very nice and low here. All right, then look at the move lately on the daily chart of the TBT. That's something you have to pay attention to. And likewise, when I go back to the spiders here, you can see the market gapped up beautifully and then started to sell. Our key level here at 95.20, we cut right through it. You paused one candle, then the next candle cut right through it. You came down to this trend line I had in for my premium subscribers all day yesterday. You came down right into that level, got a big bounce, and then the market continued here to sell off after that one bounce, down to the 20 moving average, down to our next level, 94.40, guys, 94.50 on the spiders. That's a major level. I talked about that multiple times to you guys over the past 2 weeks as being a major level. Notice how the market came right down to it, hit it, and then bounced right back up. So the market rips higher off of that, then starts to come down, breaks, pauses, and then continues lower. Where does it go? The 200 moving average intraday. 200 first hit is always a buying opportunity, folks. Look at the reversal. We talked about this in the chat room as well. As it spiked up off of that, where does it go? Right back to 94.40 key level. The market always revolves around this 94.40. What I'm looking for here, folks, is a 2-day in a row period where we close below 94.40. I want to see that. Whether we'll see it close below or above today, I don't know. And the reason I'm telling you that right now is because there's a 10-year auction that's going to be done in about 12 minutes or so at 1 p.m. Eastern time, and that will dictate a lot of the afternoon action. In addition, the beige book will be released at 2 p.m. Eastern time, and that will also give insight into this market. So all these different things are going to kind of make the market behave in a certain way this afternoon. We're going to have to see how it behaves, but I just wanted to show you the beautiful gap up today in the markets and the beautiful fade, and it was just a constant collapse, folks. The Dow opening up almost 100 points higher on the day, and now is down quite substantially on the day. In fact, the Dow right now sitting down about 25 points, the Nasdaq down 14, the S&P down 4, and remember, that doesn't seem like a lot. It's not a big down day again. We've kind of had these flat days for the last 3 days or so, but the fact of the matter is, when you take a 100-point gap up and then down 25 on the Dow, now you're talking about a 125-point drop from the opening price this morning approximately on the Dow. That is big. And you can see what's happening right now on the spiders, guys. You're coming back into the key level here, the 200 moving average. But I can't stress enough how big the rate increase is for this market. That is not good for the market. In addition, you have gas prices. UGA is the ETF for gas. Look at gas prices today, and look at the gas prices on the daily chart. Gas prices, this is a tax to the American people, folks. I'm telling you. Oil prices, okay, oil's oil. But when gasoline rises, this is every time you go fill up your gas tank, this is going to tell you you're going to be paying more. And today, again, a big update on gas. So you're seeing taxes being levied, basically. You're seeing the dollar being diluted, which is obviously killing people's buying power. So taxes are killing people's buying power. Dilution of the dollar. Rates going up is bad for the economy as well. You're killing the housing market, which was the whole basis of bailing out a lot of this stuff anyways, because the housing market was what started it when it collapsed. All these factors are coming to roost today, and you have to watch for this, guys. This is big. Now, could the Fed come in and save us? Could the 10-year somehow be manipulated and come out to look a lot better than it probably should? Absolutely, and that's why I don't care. People will say, well, doesn't that mean it's bear? No, not necessarily. Could it be? Yes, but there's always, trust me, if there's one thing I've learned in the past 3 weeks to a month in this market is that when the market was supposed to fall and break down, mysterious bids came out in the middle of nowhere and started to give the market a bounce, and a major bounce at that. Good example, just go back a couple days ago, last big down day on the markets. What happens at 3 o'clock? Monster move up here. You can go back to the week prior. Look at the move up right here. All right? There's every week it seems like 3 to 4 days right here. 3 to 4 days out of the 5-day week, you get these bids late in the day that are very, very suspicious. Some of it could be mutual funds. Mutual funds are the worst. They'll always be the last to buy along with the average person. Some of it could be hedge funds trying to squeeze the average person out there as well. But a lot of the starting of it, I believe, is an underlying bid by individuals or entities out there that may not be necessarily just buying for themselves. They might be having a different motive there. All right? Very, very interesting here in this situation, guys. Again, I think something that was also overlooked was the fact that the Chrysler buyout and by fiat and the whole issue there was actually stalled out in the Supreme Court recently, yesterday, and then it actually went through. And I think that's a big thing that the market's a little worried about, because the whole bankruptcy proceedings, you're really screwing the bondholders. And the bondholders, when you screw the bondholders, guess what? They're the ones buying bonds. You're gonna, if the government can come in and dictate a bankruptcy and say you get this, and you get this, and the Supreme Court won't stand up for what the actual rights and what the Constitution says, well, guess what? That's going to make bondholders nervous. What happens when bondholders are nervous? They're going to demand higher interest rates. So a lot of things here pushing interest rates. Now the dollar, again, I'll show you the dollar chart here. Dollar getting a nice move up here after basically an open pre-market. The dollar was down, then it recovered beautifully, has come in a little bit. Oil very strong today again, although it is off the highs. As you can see, here's your USO chart, kind of zigzagging a little bit. But again, the TBT is what you should be watching here. It's starting to consolidate. We'll see if it falls or pushes up again. But a big move on this TBT that's got to be a worry for the market. I think the 10-year will affect this, guys. Whatever happens with the 10-year, I think you could see a move one way or the other in this market. A pretty solid move. There's a lot of nervousness today ahead of this 10-year, and it should be out in about 7 minutes or so now. So you're going to really see, by the time you guys are viewing this video, you can probably know what the market did. Now, what I could say is I can just give you little levels to watch on this market on an intraday basis, and then those of you that are interested in more, you have to come join the Research Center at night, or the chat room, obviously, to get a full view about our projections, about the coming days, and so forth. But we've been dead on gold, we've been dead on oil, we've been dead on the dollar, and so forth. Just knocking them out of the park there. Now, what you can see here, again, your level right here is going to be your 200 moving average. Then you have your 94.40 and these moving averages. You just combine it all into one level. So anywhere between 94.40 and 94.55. A 15-cent range here will be a lot of resistance. If you break that, these dotted lines are minors, and then you're going to have a major level up here at 95.20, and then the high of the day right up here at 95.50. Those would be your upside levels. If you break the 200, you have a minor level just below 94 and 93.80, and then your big level is 93.40. That's a major level in this market that you can watch for on the downside if we see some downside momentum. All of this, again, you can see the market, how it's getting a bid right off the 200 technical level. The volume, again, is very light going into this bond auction and the 2 p.m. time frame for the beige book. That should pick up, though, as we get the afternoon session numbers here in the afternoon. Take care, guys. Again, I can't stress enough. You really want to learn, get a handle on this market, have the projections that matter, and be able to profit off of it. You got to join the Research Center. Good stuff there. You'll get some great insight into the market, great guidance, and great knowledge. All right, folks, take care. Thank you as always. I'll talk to you soon.